Mark, the New York Times asked today, is the U.S. riskier than emerging markets? I wanted to just say nope, which I wrote on my sheet of paper and moved to the next story. But you've apparently pulled some data that would, contradict my
I was just surprised that
very confident viewpoint?
when I hear risk, I think of how much returns fluctuate around their mean. That's the way a researcher would think about it. It's standard deviation, if you're familiar with it. It doesn't really matter, though. The point is
Volatility of returns.
volatility is great. Yeah, it's probably more accessible than standard deviation. But yes, thank you, Mike. It used to be the case that emerging markets, and by that we mean developing, what we would somewhat condescendingly call developing economies. Think South Korea. Think any Asian economy, with the exception of Japan. Think of Central and Latin and South America.
All of Africa.
They tend to have high growth rates. Yeah, Africa is a little bit spotty. That's more frontier. But yeah, you might find some in there. High growth rates, high birth rates, but volatile economies, volatile markets. The volatility of emerging markets as a basket relative to U.S. markets has actually decreased a lot. They're about even. Decreased a lot over the past roughly 30 years. That's all I looked at. Nothing fancy. That surprised me a little bit because historically EM, emerging markets, have been a lot more volatile, as you would expect. Their growth is more volatile because their economies are smaller, less mature. They're catching up, if you like, though that's a bit of a misleading way to think about their economic growth relative to ours.
I mean, I have a tough time just attributing data that you pull, but it does seem logical to me that, for instance, the Chinese market, which has
I'm not talking about.
I know you're not talking about China.
I'm talking about EM as a
but,
group. Yeah, the
right.
23
But if I
or so
think
countries
about
in the index.
EM and I weight it by market, how much of that is going to be China?
More than half now, right? 50-60%. Yeah,
right. So I think about the development of China and the maturity of the Chinese economy and markets. Not that they aren't volatile, but that I guess I'm not surprised when we put it that way that they have decreased in their volatility of returns.
In other ways, they're looking, and this has always been the argument for emerging markets, their debt to GDP, no matter how you want to define the numerator and the denominator and that, looking good relative to it. We're on an unsustainable train wreck of a fiscal trajectory in this country.
It's actually a really interesting viewpoint, right? If you want to look at it from that perspective, many developed markets are in a absolutely ugly, disastrous place when it comes to debt to GDP, whether it's the United States, Japan, Greece. Not that Greece is the most developed nation, but you know what I mean. Yeah. They're across Europe, as well as across several other developed nations. They have really, if you will, take advantage of that debt issuance benefit that developed countries have and run up that debt to GDP.
So better long-term debt trajectory, debt relative to debt sustainability is a better way to put it. They look better than we do, and I just mean the United States. Demographics, they look better. We are headed for a demographic train wreck. The number of people who are dependent on the government for healthcare and their pension is growing relative to the number of people who are supporting them. That ratio will have effectively changed for the worse by something like 50%. Relative to the 25 years before it by like 20. There are lots of different ways to look at it. It's not important to get bogged down in the specifics. The point is our demography stinks, and this is true of other developed countries like in Western Europe, for example. EM, younger, higher birth rate. That should all else equal translate into higher growth, and it'll be a while before they hit some of the same challenges in terms of funding a big welfare state that we in Europe are faced with. So for statistical reasons, Mike, and for long-term demographic reasons, I can see the case for a relatively more optimistic growth outlook for EM. That's been the case for a long time, though. The arguments I just recited could have been made and would have been made 25 years ago by, say, a manager.
Equity markets dominated those out of emerging markets for that time
period. They did. There were a time when that looked like it was being borne out in EM, but that faded, and since, you're right. Which means obviously nothing for future returns, but it is a good cautionary tale there.